Friends, today we are going to learn about Accounting Standard 12 on government grants. Let's first understand what that word means. Government, and then the other word is grant. Government in this context refers to state government, central government, any international development agency like something like World Bank or US aid or UK aid. Then you may also have these cantonments or local administration bodies. So all these come under that broad definition of government. And the other word is grant. So grant is basically a benefit given to an enterprise. It's not equity investment or a debt investment. So basically grant is more like an amount given saying, hey, so this is for your benefit, so maybe you suffered something in the past for which we are giving you benefit, or you have to do something in the future for which we are giving you benefit, or you are doing some good work for which we want to encourage you by giving this kind of money. So basically grant has alternative names like subsidies, bounties, or you can also have some sort of incentives, cash incentives. So all those come under the broad meaning of grant. Now what is this accounting standard going to talk about? How an enterprise should recognize and account the government grants, and those related disclosures will be discussed as a part of this accounting standard. So let's take an example. There is a company which wants to set up its factory, say in Arunachal Pradesh. Now the conditions are quite difficult, for say setting up factory. It's a hilly area, and I still remember the cement bags were almost 25% more compared to the cement prices in a place like Delhi. So basically these are more challenging terrains to operate business in, but government wants business to happen even in those areas, and say government gives an incentive to the company saying, hey, if your project cost is 100 crores, we will give you an incentive of 20% of your overall project cost. So out of 100 crores, first you spend 100 crores and then you will get 20 crores back from government as an incentive. Now this kind of a subsidy or an incentive what government gives is an example for government grant. Now a company which is actually setting up this factory needs to find a way to account for this 20 crores of government grant, right? So how should they account for it? We will learn as a part of this accounting standard. Similarly, say there is a company which wants to set up a cold storage facility. Now cold storage facility probably to have fruits and vegetables in that cold storage, and in off season to release them into the market and things like that. So the company wants to set up a cold storage facility. The cost for that cold storage, say, is 1 crore. Government says, yes, so it takes time for businesses like this to be viable. So we will encourage people to come into this business by giving an incentive or a subsidy for that particular asset. So for that cold storage asset, if your cost is 1 crore, we will give you about 50 lakhs as subsidy on that particular machinery. So it's an asset specific subsidy what government is giving, unlike the subsidy in case of that plant or that factory in Arunachal Pradesh, where it was on the entire project cost. So here it's not on the entire project cost, it's more specific to say there is one machine which is used for air conditioning. On that machine government says, okay, so we will give like 50% subsidy or 75% subsidy. So in such cases also there can be a case of government grant, and we will learn as to how accounting has to be done. Take the example of a fertilizer company. Say the production cost for a fertilizer is 100 rupees and selling price of that company to the farmers say is 120 rupees, 20% margin, and they want to sell it at 120 rupees. Government can come in and say, we will ask you to continue your margin of 20% on cost, but what we will do is that original cost of 100 what you have, we will give you some money which will reduce that cost. So basically your cost will get recovered. So your cost of 100, if it becomes 90, imagine some 10 rupees of subsidy government is giving and your cost becomes 90, then what will happen? On 90 you will add a 20% margin. So instead of 120 rupees as a selling price for the farmer. Maybe the selling price might be 108 rupees. So like this, there can be something like an input subsidy that a fertilizer company can get. Such subsidies are also covered by this accounting standard on government grants. Similarly, government, instead of giving assets or instead of giving money, government can say, hey, we will give you land free of cost. That is also a form of benefit what government is giving to encourage a specific business. So in such cases, how to deal with it, that also we will learn as a part of this standard. So friends, it's a very interesting standard, and you have a broad sense of what kind of things get covered in this particular standard. And now let us go into more details. So let's understand what is excluded from the scope of the standard. If a company is basically dealing with the government in its normal trading activities, something like it buys from government or it sells to government, that is not covered within the purview of accounting standard 12. Similarly, tax holidays and tax exemptions that company receives under section 10, section 80, those are also outside the purview of accounting standard 12. Government participation as equity holder. So basically in your company, if government is an equity investor, that is also outside the discussion of this particular accounting standard. Also, sales tax exemption, basically that is neither a cash or it's neither an incentive in cash or nor an incentive in kind. So sales tax exemption is also not covered by accounting standard 12. So we will now talk about when to recognize a government grant. So whatever be the kind of grant, so we spoke about a lot of examples, whatever be the kind of grant, when to recognize a government grant. So friends, first thing first, is government grant a benefit for the company or is it a loss to the company? Obviously a benefit for the company, right? So if it is a benefit for the company, there are points around prudence what we have to remember. So any benefit can be recognized only when there is reasonable certainty that we will actually get that benefit. So when a company wants to recognize government grant, there are two broad conditions that you have to remember. One, that grant should be sanctioned, right? So it's not obvious that just because you're doing that business, you'll automatically be entitled to that grant. You have to make an application, government has to approve that application. So there is a process for it. So government has to accept that. So that confirmation letter or that acceptance or award of grant is one parameter which has to be checked. What happens because of this is, once government accepts that grant to specific person, like say government grants that accept that grant and says you are entitled to that government grant and we are approving it, you will have that amount as an amount which can be collected. So that collectability of that amount can be ensured. So to ensure collectability, you require government to sanction that or approve your specific file. So that is the first condition what you have to check. The second thing is, conditions relating to the grant, the entity should have the capability to meet. So it should have already met or it should have the capability to meet in the future. So no grant will come just like that. Everything will have conditions attached to it, right? So if government is giving you an incentive, government says, hey, you are doing this work and you will continue to do this, and for so and so we are giving you some benefit. So there is money being given by one person to the other person, so there is an expectation attached to it. We should have met that expectation or we should have the capability to meet that expectation. So friends, basically what I am talking about is conditions attached to that government grant should have been met or entity should have the capability to meet. Let us now see in a precise manner what this point is all about. So when to recognize government grants? A company can recognize receipt of government grants on satisfying the following conditions. Conditions for receipt of government grants should be fulfilled. So those conditions, if they are already fulfilled, that's fine. If they are not fulfilled, there should be capability. So basically ability and willingness. So intention and willingness on the part of entity, ability and willingness on the part of entity to fulfill those conditions. And the second thing is grants are certain to be received. So when will grants become certain? Only when government awards or allots that particular grant, those grants become certain. So those two conditions must be met. Friends, in this point I said the entity or the company must have the ability and willingness to actually meet those conditions. Sometimes it may so happen that government awards a grant that basically government would have already given you money. Say government transferred some 1 crore to this particular company saying for so and so purpose the amount is transferred. Just because amount is transferred as government grant, don't think it is a conclusive evidence that government grant can be recorded as income. Listen carefully. Even if government has given grant to us, if we do not have the ability or willingness to meet the conditions attached, well, the government grant may go back. So considering that, if there are questions about our capability and intention to meet the conditions, government grant should not be recognized as income. So basically government grant should not be recognized at all. So you can't call it a grant. You can probably say I received money, that money has to be given back. So you can maximum say that. You can't really say it is a grant unless these two conditions are met. So this is like really important. Friends, another point is whenever the company receives government grant for any past event which is more like say earthquake or some floods have occurred, and as a compensation a company is receiving government grants. So there is no future condition that has to be met. Something has happened in the past, in a compensatory manner amount is being received by this company in the form of government grant. If there are calamities, earthquakes, etc., what did we understand in accounting standard 5? These should be shown as extraordinary items. So if these are shown as extraordinary items, even the compensation what is received in relation to those extraordinary items should be disclosed under extraordinary items only. So it's just a P&L disclosure point, and a note can be given in the notes to accounts indicating that so and so is received as a compensation for the loss suffered due to earthquake, etc.